What's good, man? It's your boy E coming at you with some finance solutions. Now, just trying to check out this price action here, man. Damn. From the volatility, it looks like they're, oh shit. Is the freaking, oh, I think I missed it. Is the big dog on already? Looks like it. Is Jerome Powell speaking already? Holy shit. Something happened. Did they announce what they're gonna do? Well, let me just get a couple things straight real quick. Oh man. Oh, look at that, bro. The whole market just freaking took off like a rocket. Check it. I mean, we're already watching the cues here in the spot. I'm gonna change that. We got Meta over here. Look, high, hit a high of 206.16. AMD up here at over 100, 120, $100 and 20 cents. All right, now we're seeing like some pulling back here. I mean, here's the. We're already watching these though. Wanna fix those. All right, so damn, I feel like I need to hold up. I need to find this damn this press conference. Give me 1 second. Let me see if I can find it. I'm really I've been messing around with my settings, so I don't know when Twitch ain't connected. Like I don't have time to mess with that right now. We need to find this press conference. I'm just trying to actually make sure that the stream isn't glitching or like lagging and stuff. Yeah, see it's saying skipped frames. Oh, I'm gonna have to switch it back to 720. Yeah, it's looking really glitchy. Yeah, things glitching. Hold up. And see, this is what I was trying to avoid. Yeah, we're dropping too many frames. All right, hold up 1 second. Let me just go back in here and switch it. Yeah, I just got a notification saying they only raised it by 25 basis points. And bro, look at that. Oof. And that's off the 1 minute. All right, let's go ahead and get rid of that. Only raised it by 25 basis points. Yeah, see, bro, like that. And bro, look at that. Oof. It's like I don't get why that's off the 1 minute. I can no longer stream in 1080p when I used to be able to do that with no problems. All right, let's go ahead and get rid of that. All right. I don't know where to put this. Yeah, damn, boy. Going up, dude. Holy crap. And I mean, obviously watching the cues here, like actually I don't know why this is on the cues as well. Let's go ahead and put the SPY over here. Okay. I mean, you could see how fast the level 2's moving and the tape. It'd probably be moving faster if I could, stream in full HD with higher frames. I mean, bro. Like everything's just green. Damn. Uh, I want to go. Oh yeah, that's what I was trying to do. I want to find the press conference. Well, if I can find it real quick. Um, I usually have all this set up ahead of time. Look live. It's I don't think he's come on yet. 12,000 people watching it, getting ready for it. At 2:30. Okay, so it's not on yet. All right, we'll just go ahead and duck this off on the side until you feel me? Until they come on. Yeah, I am. I mean, obviously, whoever freaking had on had some calls or you know what I mean was long biased. Uh, did pretty good. You feel me? All right, so I'm gonna change this chart here. What should we watch? Cause I got sock says down there. You can't see it though. Let's buy. All right, that switches. Like, and forgive me. Like, I'm fairly new to this platform. I'm trying to test it out. I'm trying to basically determine whether I'm going to use this or pair it with trading view. Like I like trading view because and look we're dumping a little bit. So obviously off the announcement of the 25 points, we popped on everything. But now I mean ran up decent. I mean, I guess you can call this maybe a healthy pullback back down to previous close and also the 9 in the long term. Didn't even get all the way back down to VWAP. And then again, healthier looking pattern with a series of higher lows, each one opening above the previous one, and then the same sort of pullback. So let's see what happens here. Do we maintain a higher low here at this 9 in the long term, or do we come back down? You feel me? I mean, if you are long biased and bullish, you want to see some moderation. You want to see some healthy pulling back, and I mean, really, you can't infer much. These are 1 minute charts right here, and again, this level 2 and tape is it's for the SPY or whatever chart is here. Let's look at it on the 5. I mean, on the 5, it obviously it's clear. You get a little bit more clarification, and it's a little more logical. Let's look at the 3 minute. And like it really depends on what happens here, bro. And obviously, this is just a. I mean, obviously nice volatility and just now, and some decent range to trade off of short term, but basically once Jerome Powell comes on, that's when you will know exactly what's going on and what to expect. Uh, and again, here's the SPY on the daily. So, and basically for the last um, few days, I mean, what date was this? The 13th. Like since we came down here and I guess hit this support, we've been kind of in an uptrend on the daily chart. So wait, what is that? 383. Basically, I'm not really used to this platform. Hold up. So we came down here. Ever since then, we've kind of been in an uptrend, and obviously this was acting as a decent resistance for. Let me see. This was the 16th to the 6th. Wait, no, is that right? Yeah, 12/16 to 1/6. So about 2 weeks, and then we broke through it. Ran up, topped out up here. So I mean, obviously, there's going to be some resistance up here at 412.70s. You feel me? I mean, as you can see from all this topping out, all these wicks, topping action, and I'd go ahead and probably put that right there. I gotta figure out what my hotkeys are. Like that's what I'm saying. Like it's making me lean more towards trading view. So I would expect some resistance to be up here at 413. You change the color. I'm gonna make that blue, dude. Resistance. Got some resistance up there. I don't like that color. Yeah. And then over here I was watching Meta, and damn, looks like the market went up and then dumped, and like we're back down. We got Meta and AMD here. Also got Success down here. Let's go back over here. See what's going on. And yeah, look. So we came up here. Let's go to the 5 so you can get a little more clarity here. So 400 on the SPY, about 313 on the Qs. Look, we just gave it all back and some. It's not 2:30 yet. I mean, did he come on early or something? No, it's not on yet. Let me just get this ready. You feel me? All right. So look, we ran up decent just off the number print, and then freaking gave it all back. But we'll see what happens when Big Dow comes on. All right, see that disappears. I don't want to miss it. All right, I'm gonna move it over here for now. And then, I mean, really quick, look at the here's the S&P 500. So I guess this is new day. This is pre-market trading. Uh, Found some support, then ran up. All right. This is a 10-minute, so I would expect there to be a level here. Let me see if I can remember how to do this. Yeah. Expect there to be a level here. I don't know why it's not telling me what level that is. I'm just not used to this platform yet. So I guess what is that? Like 414s or something, 413.66. Hit that, faded, then came down here. There's another level here. At what was that? It looked like 39.90 flat. And you can also see some chopping around right here. Came down here, ran up. I mean, I guess previous closes here. So we broke above it all the way up here. Got as high as 40.31. All right, then we kind of sold off a little bit back down the previous close, which seems to be 40.0310s, and then they bought it back up. All right, let's look at the main screen. And again, this is the tape for the SPY. Man, it's moving pretty quick. I really like the trading view. I like the way their charting software just looks, and it's user friendly. So and I was doing the math. All right, looks like we're getting another little push here. I mean, this is the 1 minute, but you can't really get any levels off of that. But all right, so basically, damn near previous close we came back to, and now we're getting another push up. You can actually go down to 30-second candles on this thing, bro. Like, I've never read price action on 30-second candles. But yeah, we're getting another push for sure. Let's go back to the 1 minute. Like 30 seconds, like that's like, I feel like too low of a time frame, bro. I mean, obviously there has to be some benefits for scalpers. Like, I've seen people using like freaking 10-second candles. He's not back on yet. At 2:30. All right. All right. I'm gonna keep my eye on it, make sure we don't miss it. I mean, 1 minute. I guess we'll watch it on the 1 minute to get our thrills. You feel me? It seems like there's some support around here. Or, not, I mean, intraday support. So the SPY ran up, then freaking, I guess, hit a resistance right around 401. 401.20s, fade it back down to VWAP, which also happens to coincide with previous close. And then try to make another run at it. Looks like this 400 and change, like 415. I mean, probably just be better off just calling it 400. That's weird, bro. Cause like you have to like grab the run line. Like how do you fucking like how do you change the color? Okay. I'm gonna make that right there a key level on the spire. Right here. That 400 flat, nice psychological level there. You know what I mean? On the cues, it's going to be. But I mean, like right around here, like 312s, 31280s, 31290s. All right, I'm gonna go ahead and call that key level. Hopefully it doesn't look too bad because I had to go back down. I had to change my resolution. So it hasn't come on yet. As far as what's advertised, uh, he should be coming on in about 7 minutes. But they should start the feed before that. Let's look at some of these other tickers real quick. There's AMC. I'm gonna go to like a 3 minute. AMD. Looks like the queues are like trying to sell off. What about Amazon? Basically the same thing. I mean, you would expect to see the same type of price action on a lot of the large caps or mega caps. So look, there's Boeing. Look, Amazon. Look, the charts almost look identical. You feel me? Uh, and again, that's why it's a major advantage to be able to watch the entire market. You know what I mean? It just says, like, bro, look at Bitcoin. Bitcoin got up as high as 28.9. Damn, when's the last time Bitcoin been up that high? A thing like it's making another run, bro. Look. Yeah, I mean, what's this? 2022, March of 2022. Oh, that's when it was like up at like all time highs, damn near. I mean, what was the all time high on Bitcoin? Like 60, something like that. Uh, I mean, we haven't been up. Bitcoin hasn't been up this high since last year around May, so almost a year ago. That's crazy. I mean, that's something to consider. Charge point. Look, charge point got up here. The high was what, 1017? What about Ethereum? I mean, Ethereum kind of been like, holding up, I think, a little better, if I'm not mistaken. But the last time we've actually been up at these levels on Ethereum was, or higher was last year. Because where are we trading at right now? What was the high? 1823. So right here. Yeah, around last year. Freaking GME did a little squeezing yesterday, huh? That thing popped right after market close. Right here. I guess on earnings. You feel me? Like, people printed. They definitely printed on that thing. Get Google. Let's go back. Again, same thing. It looks like the market's trying to push back up. But look, that key level I drew. Let's see how it reacts to that level. The thing looks like it's not even. Yeah, it's not. Got a 1% incline. All right. See, this is. Let's get rid of this. Go in here and put my own line. Problem is, I forgot where it was at. Did I make it like 400? We're gonna call it 400. Little psych level. I like to put my key levels in white. I learned that from a vet. So JP is supposed to be coming on here pretty soon. Because it's what, 2:28? He's scheduled for 2:30, so that live feed should be coming in here pretty soon. Hopefully they don't give me a freaking copyright thing for that. $312.85. Let's go ahead and get rid of this. I'm just gonna put my own there. It looks like it has like an incline or something. 312.90s. Might as well call it 313, man. But actually, nah. Right here. There's your key level. On the spine, the cues. And breaking past it. The cues are it's broken above it. All right, there he goes. There he goes. There he is.
Good afternoon. Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount
doesn't
window,
that contribute to
is
inflation,
effectively
though?
meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2%
That's
goal.
hawkish.
Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Every time you start stuttering, the market freaking.
The U.S. economy
jumps a
slowed
little
significantly last year, with real GDP rising at a below-trend pace
What
of
did I tell you?
0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In
And also
contrast, activity in the
them
housing
income
sector
tax
remains
checks.
weak, largely reflecting higher mortgage rates.
Mm-hmm.
Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories.
Look, we're dumping. Look,
Core
key levels up here,
excluding those, core PCE prices rose 4.7%.
You stuttered. What
In
did
February,
I say?
the 12-month change in the CPI came in at 6%.
When we start stuttering,
and the
we
change
dump,
in the core
bro.
CPI was
Look,
5.5%.
Crack previous close-in VWAP.
Inflation has
On
moderated
the
somewhat
spy.
since the middle of last year, but the strength of these recent readings indicates that inflation
Oh my
pressures
God,
continue
dude!
to
They
run high.
gave it all back.
The median projection in the SEP for total PCE inflation
Oh my
is
God, look at Bitcoin,
3.3% for this year,
Ooh.
2.5% next year, and
Look at that.
2.1%
There's Bitcoin,
in
dude. Look at this
2025.
shit. That bitch just
The
went
process
from
of getting inflation
28.5.
back down to
Look.
2% has a long way to go
Oh my God!
and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures
Crack the
from
nine.
financial markets.
VWAP.
The Fed's monetary
going down here
policy
to the
actions are
120.
guided by our mandate to promote maximum
AMD
employment
holding up a little
and
better,
stable
actually.
prices for the American people.
And then I got success.
My colleagues and I are acutely aware that high inflation
Success.
imposes significant hardship
double-
as it
double
erodes
bottom
purchasing
over here.
power, especially for those least able to meet the higher costs of essentials
Right
like
here.
food, housing, and
Double
transportation.
bottom there.
We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2%
Strongly
objective.
committed. I mean, he
At
always
today's
says
meeting,
that.
the committee
Look at
raised the target
success.
range for the federal funds rate by a
Above
quarter
the-
percentage
getting
point,
above the 120.
bringing the target range to
Let's
4
go
and
back.
3/4 to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger
Dude,
than
Bitcoin
expected,
just freaking
demonstrating
like,
greater
don't.
momentum in economic activity and
Look at
inflation.
this.
We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit
I gotta
conditions for households and
figure out how to
businesses,
track the dollar
which would in
on this
turn
platform.
affect
It
economic
should be
outcomes.
DXY.
It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary
When I
policy
type it
should
in, it goes
respond.
to Dixie Group. What the
As a result,
fuck is
we no
Dixie?
longer state that we anticipate that ongoing rate increases will be appropriate to
Okay,
quell
okay,
inflation.
look.
Instead, we now anticipate that some additional policy firming may be appropriate. We will
Oh,
closely
it's
monitor
like-
incoming data and carefully assess the actual and expected effects
A
of tighter
scalper's
credit conditions
haven
on
right now,
economic
my guy.
activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the
Tesla.
federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects
Okay.
that the appropriate
Going
level of
back
the
up.
federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These
what-
are little changed from our December
Let's see
projections,
what happens when we get back
reflecting
up to these key
offsetting
levels.
factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions, meeting by meeting, based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of
GME.
below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices
Trying to
over
get back
the longer
above
run.
VWAP. What about Google?
To conclude, we
Above
understand
VWAP.
that our actions affect communities, families,
All
and
right, to
businesses across
conclude,
the country.
Let's go back to the spy.
Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you.
got
and
my
I look forward to
preview
your
open.
questions.
I'm surprised that shit ain't glitching and lagging.
Thank you. Colby Smith with the Financial Times.
Colby Smith always
How
goes
confident is
first.
the committee that the recent stress
He's
that we've
always
seen
first.
and you've alluded to is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital
How?
liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all
If it
depositor
was strong,
savings
you
are
wouldn't
safe,
have to take
and that
powerful
the banking system is
actions.
safe. Deposit flows in the banking system have stabilized over the last week. And the
They
last thing
better.
I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Okay, just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll
here's
be
the
happy to
5
explain
minute
why.
on the
And really, it
spy,
is
look.
that the intermeeting data on
Chopping around
inflation
here.
and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting.
It was that
We are
stutter.
committed to restoring price stability, and all of
All
the
right, key
evidence
level.
says that the public has
SPY
confidence
the
that we
SPY
will
is
do so,
above that
that
key
we'll bring
level.
inflation down to 2% over time. It is important that we sustain that confidence with our actions
Actually,
as well as our
the
words.
level's like
So
more
we
like
also
right here.
assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby
Where's the
weigh
key
on
level?
demand, on the labor market, and on
It's
inflation. Such a tightening in
400
financial conditions would work in the same
15.
direction as rate tightening. In principle, as a matter of fact, you can think of it as
Fighting,
being the
look at the
equivalent
spy
of a rate
fighting with that
hike,
key level.
or perhaps
All
more
right,
than that.
above
Of
it,
course, it's
Q's
not
above
possible
it.
to make that assessment today with any precision whatsoever. So our
That's what-
decision was to move ahead with a
Getting back
25
above
basis point
previous
hike,
close.
and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some
The
policy
S&P
firming may be
500
appropriate. So going forward,
Looking decent.
as I mentioned, in assessing the
God,
need
look.
for further hikes, we'll be focused, as always, on the
All right.
incoming data and the evolving outlook.
High of day is
and in particular, on our
40170s.
assessment of the actual and expected effects of credit tightening.
All right.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that
Bitcoin,
this will turn out to have very
trying to
modest
get back
effects.
above
These
previous
events will
close.
turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case, the path might look different. It's also possible that this potential tightening will
Stuttering.
contribute significant
We're almost at
tightening
the high
in
up there, though.
credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know. So
Do you have concerns that the hike you did today could further exacerbate the problem in the banks?
no, I mean
No.
with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Did you say the dead? Nick. Oh my God. All right, look at the S&P 500.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony
10
2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the
If
board
the high
staff
is 40,
incorporated
31,
today on
45.
material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was significant number of people saying that they anticipated
Bitcoin
there
back
would be
above previous close.
some tightening of credit conditions, and that would really have the same effects as our policies do. And that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been. Remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people. It's very difficult.
for the
There's so
most
much
part, bullish
uncertainty.
day, though.
December was a good place to start, and
Yeah.
we wound up with very similar
Came
outcomes for
back
December.
down.
And
That's
in
at
a
the low,
way,
or
the
made a
early
new
the
low
data
and then straight
in
up.
the first part, the first 5 weeks of the intermeeting period, pointed to stronger inflation and stronger labor market. So that pointed to higher rates, and then this latter part, kind of the possibility of credit conditions tightening, really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
we know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks.
I mean, they said they were going to
our
keep
rate hikes
tightening
were
until something
well
broke.
telegraphed to the market, and many
So
banks have
shit's
managed to
breaking.
handle them.
Obviously.
Hi, Victoria Guida with
Oh my
Politico.
God.
I wanted to
New
ask,
high.
you, along with the FDIC and the Treasury, the Fed
New
Board
highs.
decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made.
Yes.
Was it purely a confidence issue, or was there a concern that there would be some sort of
Let's get rid of
economic
this key
contagion or
level.
financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you
Bitcoin
also,
making
just
its
to
way
follow
back
up,
up.
can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and
going
regulation?
back up.
So Vice Chair
High
Barr
day of
is of
on
course
Meta
leading
is,
that review,
207.37.
and he's responsible for it in his capacity as Vice Chair for supervision. I realized, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so
You know how it happens.
what we did was early Monday morning, we sat down and said, let's do this. And he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
You better be.
Hi, Chair Powell, Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was
Back above previous close, like I said, crossover VWAP.
Is disinflation
trying to
still
get above
occurring
the
in the U.S.
120.
today?
Yes, I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see
Right.
the new leases being
Going
signed
up
at much
at a
lower
decent
levels of
rate right
inflation.
now.
So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector, and that is that's just something that will have to come through softening demand, and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect. And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue, and we don't really see it yet. It's so people are making estimates. People are publishing estimates, and it's very kind of rule of thumb guesswork almost.
New
at this
high.
point. But we think it's potentially quite
New highs
real,
on the SPY
and
and the
that
Qs.
argues for being alert as we go forward, as we think about
402.50,
further rate hikes.
315.25.
For us, we'll be paying attention to the actual
Apple
unexpected
162.14.
Gina.
Then Tesla's high of day is way over here
Hi,
at
Chair Powell. Jean Smilek from the New York
266.
Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision.
Yeah, Bitcoin's
so
down
at a
there.
basic level, Silicon Valley Bank management failed badly They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So for us, for our part, we're doing a review of supervision and regulation. My only interest
these
is
levels up
that
here
we
was just the previous high.
identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's
haven't given
testifying
back
next
the
week.
previous high of day yet.
But that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear to your last
Apple
question.
hasn't
It's
got
clear
up
that
there yet.
we do need to strengthen supervision and regulation. And I assume that there will be recommendations coming out of the report, and I plan on supporting
it
them.
kind of
and
looks
supporting
like
their
it
implementation.
eventually will, though.
Sorry, and the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
No.
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened.
Right,
and so
right.
that's really the nature of the of the review, is to discover that.
She came with that hard line question.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally
Getting back
wrong
down to that
from the Fed,
kilo-
or is there something different about the way you're looking
way
at
it
it,
was-
given that you're now thinking that moves
okay.
might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, a gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here, are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions.
Back down that
So that
level.
we're looking at, and it's highly uncertain how long the situation will be sustained or how
He's
significant
stuttering.
any of those effects would be. So we're just going to have to watch. In the meantime, and obviously
Oh,
at the
he's
end of the
stuttering,
day,
dude.
we will do enough to bring inflation down to 2%. No one should doubt that.
Go to Rachel Siegel.
Look at that double top up there on Meta.
Hi, Chair Powell.
Would
Rachel
have been a
Siegel from the
decent
Washington
technical
Post. Thank
trade
you
to
for
take
taking our
right there.
questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy.
But there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to
Well-
roll over later this year and next, and that
my
smaller
dad was
regional
just
banks
talking
also
about commercial real
disproportionately hold
estate.
those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused on commercial real estate?
What's his name?
We've
Jo-
well aware
shout out-
of the
shout out
concentrations
to
people have in
Josh.
commercial real estate.
Josh?
I really don't think it's comparable to this. The banking
Trading
system
fraternity
is
trainer?
strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
And one other question, would you be open to an independent investigation separate from the Fed's probe?
I welcome, it's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails,
dog said, "Bring
there
it
are
on."
investigations, and of course, we welcome that.
You ain't worry about nothing.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help from the fiscal side to get inflation down faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things. And
Dog said, "Bring it to the
we
dough."
have responsibility for price stability. The Federal Reserve has responsibility for that.
Bring it to the
and
dough out.
Nothing is going to change that. So
Nothing's gonna
we'll get
change
inflation
that.
down to 2% in time.
And if I could follow on that.
How much time,
But they're
though,
working,
dude?
the spending that's happened is working against what you are doing, right? So it's
Exactly.
prolonging inflation?
If you have to look at
That's what I'm
at
saying.
the impulse
They're-
from spending.
they're-
Because
they're
spending was, of course, tremendously
pumping
high
more
during
money
the
to
pandemic.
save
And then as the
banks.
pandemic
And
programs
it's
rolled off, spending
Sick.
actually came down. So the sort of fiscal
It's
impulse is
moving
actually not
counter-
what's driving inflation right now. It was at the
That's
beginning,
that-
perhaps,
that-
part of what
that's
was driving inflation. but that's not really
contradictory
the story now.
to getting inflation down.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the
All right.
government's response on Silicon Valley Bank 2 weekends ago.
All right, we're looking to
First,
give it
why
all
is this new
back.
bank funding facility done under Emergency 13.3
Here's
authority
free-
as
here's
opposed
free
to
disclose.
expansion of the discount window, changing the
On
terms
the
of the discount
spy.
window that's been around a long time? And second, can you discuss the Fed's role in the
The spy already
FDIC
cracked
guarantee of
VWAP.
uninsured depositors and why there's $143 billion on your balance sheet last week
Oh,
supporting
they
that deposit guarantee?
bring in the heat right now.
Sure. So 13.3 seemed like the right, we have a little more flexibility under Section 13.3. We've done quite a lot under the discount window as well. We needed to do a special facility that was
Bitcoin,
designed a certain way, so we did it under
GameStop.
13.3.
Actually,
Really no
let's,
magic to that. It's only available in unusual and exigent
put the
circumstances, and it has to
500 here.
meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Look what Bitcoin did.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike,
It
as
looks like
does
there's some
the
support on
change in the
Bitcoin down
language
here
in
at
the statement,
28.1177.
and which suggests that you're perhaps nearing the end
Look
of
at
the
the
cycle of
S&P
rate hikes.
500.
Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end?
No, absolutely not. No, if we need to
The
raise
S&P 500
raise
is
rates
now
higher, we
cracking,
will.
previous
I think
lows.
for now, though, as I've mentioned, we see the likelihood of credit
Meta.
tightening. We know that can have an effect on
Meta
the
gives this level
macroeconomy,
up
on
right here,
demand,
bro.
on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching at
203.60.
what's happening with inflation and in the labor market. So we'll be watching all those things, and of course, we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Can't let Meta crack that.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious
Came down here
at
and
what
bounced
point
a
the
little
financial
double top,
supports that the Fed is extending
bottom.
through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So, so people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So the recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the price and down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that
Double
that's
bottom down here, kind of cracked it, but I'd say maybe down here.
Hi,
Look,
Chair.
low of day
Katarina
on the
Scriba
spot,
with Bloomberg
397.37.
The
Q's
minutes of the
309.75.
January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't
Bitcoin
recall
on
the
the low.
specifics of that. It's been quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as
Respecting it so
longer term
far.
rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as is
Despite the
it
Q's
is
and
now on the
Apple.
public record, the
Bitcoin
supervisory team was
is looking
apparently
to be heading lower
engaged,
here,
very much
making
engaged
new
with
lows.
the bank repeatedly and was escalating. But nonetheless, what happened, and so that's really the purpose of one way to think about the review that Vice
28,
Chair
27, 808.
Barr is conducting is to try to understand how that happened and try to understand how we can do better
Right,
and,
so
and what
this
policies
is
we need to
crucial
change.
right here,
I mean,
'cause we're
one
at this
thing
double
is
bottom.
the speed of the. I'll come back to that.
We're
The speed
actually
of the
cracked it. All right, so we're
of the
heading
run,
lower.
It's very different from what we've seen in the past, and it does kind of suggest
Might be going down here to
that there's a
visit this
need
low.
for possible
397.37
regulatory
on
supervisory
the
changes,
SPY.
just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back to you on that. Yeah, I don't know.
What? I don't like that answer.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying
All right,
that
cracking,
de facto
cracking.
deposit
New
insurance
lows.
covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors? Thanks.
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Should assume? I mean, okay.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit
Made
of
a
color.
new
You
low on the
said
S&P
during the
500.
first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla
This
in
is
the room?
30-second candles
Didn't you
right here,
breathe
bro.
a sigh of relief when that
Crazy.
merger happened? Thanks.
Sure. So, you know, that was really the Swiss
long wick right
government. We, of course, were following it over the course of the weekend.
New
And we were
lows.
engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to,
New
and it
lows.
has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I
There
would
goes
say
the
that that's
stutter.
gone well so far.
Rub at his face.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And I mean, there's really
Stutter.
we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that the inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
But I guess the question is, historically, it's hard to...
Mr. Mike, please.
Wait, what happened?
Yes, sir. Historically, it's been hard to contain unemployment, and the question is, do you worry about some
Making
sort of
new
snowball
lows,
effect,
bro.
and how do you factor that into your projections and your
Well,
thoughts?
it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. You know, the models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions
I
tend to be
just seen
nonlinear.
a
and that's what
nasty dump
so
on AMD.
We don't know whether that'll happen this time. We don't know. If so, we don't know
Dude,
how significant
we're
it will
cracking
be.
to the downside
And so,
decent.
You know, we're very
Apple now
focused on
cracked
getting
previous
inflation
lows.
down. Because we know in the longer run that is the
Let's
thing
get
that
rid
will
of this.
most benefit the people we serve.
Yes.
That's how we can have a long, we've had very strong labor markets through these long expansions that we've had. 4 of the 5
Looks like
longest,
we
or
won't
3
be
of the
needing
4
that
longest
anymore.
expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or
my God, bro, look
an
at
expansion.
Bitcoin, bro.
You can have very, very long expansions without high inflation, and we had several
Yes.
of those, and they're very good for people. You see late in an expansion,
look,
you
looks
see
like damn
low
near-
unemployment, you see the benefits of wages going to people
They're, like,
at the lower
correlated.
end of the wage spectrum. It's just a place that we should try to get back to.
They look identical. The S&P 500, the SPX, and
Chair Powell,
Bitcoin.
Jean Young with Market News.
Look at that.
I just wanted to ask, with all the events of the past 2 weeks, do you
There's some
still see
correlation there, bro.
a possibility of a soft landing for the U.S. economy?
You know, it's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. You know, the question will be how long this period is sustained. The longer it's sustained, then the greater will be the
pain,
the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to
In
that.
other
I think that
words-
pathway still exists, and we're certainly trying to find it.
The Q's trying to get back above previous close. Apple
Hi, Chair
actually
Powell,
held
Nancy
it.
Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious.
A
Those are
lot.
serious regulatory, in particular, immediate attention. And I guess there were 6 of them. So
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will you enforce them?
that is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. What can we do to make sure? But again, that's not for me to answer
So you
today.
don't have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, this review's going on, and I want nothing other than
The
us
stuttering.
to find out what happened and why, figure out what we can do
Don't
to
they
do
know what
better,
happened?
and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. It just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, to this work,
bank.
not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Okay, we'll go to Jennifer for the last question.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut?
Wait.
And have the
Calls
bank
on the
failures
spy,
prompted
bro.
any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about
Pretty
changing the
cheap right
balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question
The
before that was,
397s
just
were
give me
I don't know, like
Curious
freaking
how
40
you view
cents.
financial conditions now, and if
Yeah.
credit
Okay.
were to tighten enough,
Now
if
they're
that would prompt a
89,
rate
90
cut.
cents.
So,
Could have scalped
financial
for a quick,
conditions seem to have
40,
tightened,
50
and
bucks
probably
per
by
contract.
more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions.
I'm gonna
So
say,
we think that, though.
bro,
So
for
there are other
how
measures
much
which,
data
if
I have,
they're focused on
how many charts I have
bank lending
open,
conditions and things
and
like that,
all
they show
that,
some more
like-
tightening. The question for us, though, is how significant will that be, and how,
platforms
what will be the
seems to be
extent of it, and what
handling
will be the duration of it?
pretty well.
And then, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. And so, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, it could easily have a significant macroeconomic effect, and we would factor that into our
I
policies.
went into settings though and put my RAM really high.
I mentioned with
I
rate
got
cuts,
32
rate
gigs of
cuts are
RAM.
not in our base case, and so
How many gigs I'm using?
That's all I
for
have to
the
say.
program.
So-
Fucking
Thank you very much.
half of them. All right. All right, there he goes. It's over with. I mean, some decent volatility in range to trade off of. Until the upside and downside. Look now we're getting some volume back towards the upside, increasing 385, 393, 470. Let's see what we get here. Oh, look, that thing just freaking popped, bro, to over 1 million. All right. Also Bitcoin popping back up. Looks like, obviously, let's go to like a 3-minute, 5-minute. So, yeah. I guess people figured the worst is over and there's a decent floor in the market, and they can go ahead and buy some dips now. I mean, that's the conclusion. I mean, that's the only thing that makes sense. Right after the press conference is over, we start bouncing back up to the upside. Yeah. 5. Yeah. Yeah. Bitcoin was trying to push up higher for a second. S&P 500, same thing, kind of a floor, trying to push back up. More than likely, I feel like we get back up to previous close. And then if you see Google, man, Google's taking off. Look at this. Just really quick. Look at that thing. Bro, it's just like a, you know what I mean, like V-shape. V-shape shits. I'll go back to like the 3 minute. And Meta, same thing. Look, double top up here. I mean, I guess you can consider that a double bottom, then a dump, and now we're going back up. AMD, kind of doing the same. What about let's check out Nvidia. I mean, obviously the same kind of price action. Nvidia is the big dog though. And then back over here. Let's close this preview. Okay. I mean, these are 1 minute charts. Let's go to the 3. For slightly higher time frame for a little more logic. I mean, I guess yeah. Dude, for the amount of data shit going on, no frames dropped, no frames skipped, 4 frames missed due to rendering lag. That's out of you know what I mean, like 275,000 frames, only 60 frames a second. But yeah, bro, some decent price action and volatility to trade off of. I mean, it's always like that when they you know, have the meeting or whatever, like the new rate hike and press conference. But that's interesting because you feel me, they're trying to fight inflation and get it down, but at the same time they're pumping more money into the economy. I mean, the bank, you know, to save the banks and stuff like that. I mean, I guess they have to do that. But yeah, I mean, decent little roller coaster there, bro. There's a SPY. Apple looking down there like the SPY. Little meme stock. AMC just you feel me? Not much going on. All over the place. AMD, look. I mean, that thing just from market open, basically just been an uptrend. Yeah, we hit a little resistance here. What was that? 98.50s. Started to fade. Came back down here. And basically consolidated for, I don't know, was these 5-minute candles? So like almost an hour. And what, 5, 10, 15, 20, 25, 30, 35. About 40 minutes. And then from there, straight up and continuing upward. Amazon, a little more volatility. Looks like there might be some intraday resistance here. Check out this daily. Yeah, definitely resistance there. $101.25, 102, about 102s. About Boeing. I mean, Boeing just dumped off the open. Look at this. 203.80s. All the way down to 199 20s. That's some range right there. You feel me? Almost 204 down to 199 and change. Then tried to, you feel me? I don't know. That chart looks trappy though. What about China stocks? Dumping off the open. Found the support, bottom of the range, or what have you. And then towards the upside and basically in that range. No, 84.20s. And then the top is 85.20s. I mean, high of days 85.40. Look, I mean, that's why you don't chase off the open and let the range develop, and then just basically, trade in the ranges. But Bitcoin, there's Bitcoin was what's like 30-minute candles or something. Bitcoin was on its way up. Almost got to 29. Look, 28.9, 29. You feel me? And then tank. But even so, I mean, Bitcoin has made a resurgence. Charge point. Freaking guilty of bag holding that. Not gonna lie. Here's ETH. And look at that. November of 2021, Ethereum was almost at $5,000, bro. That's crazy. What was the high on that thing? Almost 5. See what GME's doing. I mean, GME gave it all back. Look at that. So this is going until the close right here, and then they announced their earnings, and that thing popped from like 1750s up to 2350s. Freaking one candle, one 10-minute candle, and then proceeded to grind up even higher, up to 2750s. And I mean, even though we tanked off the open and gave some back, that's a higher low. It's still holding its initial move upward. I'll say right, like right around here. As long as GME can at least hold that level, you feel me? There could be something there. Here's Google. Meta. Like I said, man, like all these larger mega caps are gonna basically look the same for the most part, unless there's like news in a specific stock or sector. There's Myrna. Look, faded. With the volatility. Found some support intraday. Let's see where the support is on the daily. Definitely 143.50s. And then, more closer to where we're trading at now, like what, 148.90s, 149. Dude, I remember trading freaking Myrna, like when the Rona was out, and they were still like trying to find the vaccine and stuff, bro. This thing ran up to like damn near 500, bro. Microsoft, basically doing mega cap things. What about Netflix? High a day is 306.50s. Another China name. I mean, the way the price action's looking, it seems like, I mean, we're going into the close, but it seems like we may be able to grind up and at least get back to the top of the range. I mean, look at NVIDIA. Came down here, hit VWAP, and she's been putting in higher lows, higher low, higher low, higher low, higher low. Stepping up. See, like, it's hard to do the trend lines like that. I gotta fix that. Snap, SoFi, another one of my bag holders. Okay, so you got the S&P 500 fighting to at least get back to previous close. Uh, I mean, it was like it's dumping right now. A lot of shit's dumping right now, bro. Hold on. I don't know what happened. It just started dumping. Look, got it back up to previous close and rejected on the SPY. I guess tech's a little stronger because I mean they're both following the same pattern, but it looks like tech's leading. If you take into consideration that the SPY rejected off previous close, the Qs are still way above previous close, but trying to get back down. So, which one's leading? Which one's lagging? Since the SPY is under previous close, can you infer that the Qs will eventually follow it and go back down, or is it the opposite? Since the Qs never broke all the way down, does that mean the SPY will eventually get back up over previous close? Well, it's kind of the way I like when I'm trying to watch the entire market and find like relationships and correlation. It's the type of stuff I look for. So look, and for now it looks like the Qs may follow the SPY down. Who knows? Look at that wick. They're buying it up. Let's check out the 1 minute. Let's get down in the trenches and see what's happening. I mean, the Qs are getting closer and closer. I mean, I guess we've been in power hour for a minute now. Tesla. It's hard to call right now. That damn level 2 seems to be moving pretty fast. And also, like, I'm missing a few, like, routes off of it, like, exchanges. So, I mean, being that there's a few exchanges missing, you'd have to assume it'd be going even faster. Something's moving though. Yeah. So I guess For now, it looks like the Qs will follow behind the SPY. Yeah, look, Q's now here chopping around previous close. Yeah, cracking it. Kind of tried to fix my level 2. I guess it looks a little more normal now, like with the colors, right? I don't know what the hell was going on with it before. Yeah, but just wanted to kind of you feel me, catch that volatility and price action off of the press conference, and kind of see if the like the platform could handle it with like all the data and stuff and all the volatility. It seems like it did pretty good. I'm still kind of torn though, like in between, like, because I really like how trading view looks. I mean, like if you check it out, I just like how the charts look. For instance, look, it's just a lot more user friendly, I feel. You feel me? And then it's like so easy to draw like your trend lines and stuff. Look, just go in there and go like this. Boom. Then you can come up here and like change the color, the thickness. You feel me? Like it's just I don't know. I feel like it's user friendly. But I don't know. I didn't want to say that. I don't know how like how the data. I haven't seen like any level 2 or time and sales on it yet, so if I can make a little more room on this thing. I don't think it makes a difference. I mean, Bitcoin's like trying to give it all back. Look at that on the 5. See, look, I don't know, something's not right with that. Tesla trying to grind back up. Let me see. What were we trading at? 396, around 397s. So, I mean, 0 day expiration. I mean, dude, like what's that? It's 341. So, what was that? 19 minutes left. I mean, the calls are cheap, but with this price action, looks like we're going to continue to fade. So I understand why they're cheap. Like the 397 calls are, I mean, I don't know, what, 70 cents? But for instance, actually, hold up. I mean, if we're gonna bounce, this is like we're like at a double bottom right now. You feel me? So if we're gonna bounce, it'd be, you feel me? Look right around now, and look now the 397s are they're just up to $1. Remember, we were trading at like 396 and change. Now we're 397 and change. The 398s are 40 cents. That'd be here. I mean, it's 15 minutes left. So the question you would have to ask yourself is, will we get what will the 10 minutes of terror entail? Will it be the traditional 10 or will it be the inverse? I don't know. I feel like previous closes here, we got as far as here, then dumped all the way down to here, ran back up, and then faded again. Found some support around here. So that could be like a double bottom around here. I mean, I don't know though, bro. Like the Qs have now cracked that prior close, man. Yeah, we're dumping, increasing volume to the downside, selling volume. Bitcoin continues to fade more. Um, Something to take into consideration. Let's say would watch this thing right here, and look, we're getting down here to the low. I mean, this could be a double bottom if we hold this level. Oh no, no, we're not. We're the double bottom's out of there, bro. We're making new lows on S&P 500. Hey. Brutal, son. More new lows. 39.70, 150s. More new lows. 39.70. Like, the fuck? 39.67. More new lows. So 39.70, and now we're trying to bounce. Yeah, man, that thing fading. Now we have Apple on a previous close, trying its damnedest to hold that level, but looking like it's about to crack. Let's put Apple up here and watch the level 2 and the tape. Yeah, man. Look, the SPY is like way up on the previous close now, man. On the low. 395.33. Making more lows. So going into that last 10 minutes, it's looking like we're going to dump Bitcoin on the low, making new lows. Again, the S&P 500 on the low and heading lower. Google is not on the low. The low on Google is 104.60s. All right, closing in on that last 10. All right, it looks like we got some we had some volume, some buyers step up and buy it up off the low here. You can see from the wick right here, they bought it back up. And they're trying to buy it up, prop it up, catching a bid down here. Let's see what happens though. Is it going to be enough to at least hold it there and prop it up? I don't know. We could possibly see a reversal. Let's go out to a higher time frame. So look, the last few candles have been trying to hold this little level right here, 395.20s. Same thing on the Qs. If we don't hold that and we crack it, bro, like, which it looks like that's what's happening. Here's the 30 second candles, bro. That's crazy. and we're cracking. We're going down, bro. Yep. So 394, what, 70s is where we're trading at now. 394 puts about 30 cents. Good. They jumped up in price to like 40 cents for a second. At 40 cents now. $0.45, getting closer to 50 cents. We are within that last 10 minutes here. Bitcoin on the low, S&P 500 on the low, Google getting down to the low, Nvidia far away from the low but fading fast. Meta on the low. Google on the low, Success on the high. Look at the S&P 500 just so you can crack the low, bro. Making new lows. And you can't see Google. I'm gonna fix it. I'm gonna fix the chart. I'm gonna fix that monitor so we can see more on it. And then you got Meta over here just freaking on the low, heading towards 200. And then Nvidia, I mean, that thing's just been tanking. Yeah, bro, the market's dumping, bro. 10 minutes of terror, bro. I maintain that. 393.66. So those 394s. I mean, they were as high as like 60, 70 cents for a second. Could have scalped some of them for a quick profit. Look, they're back up to what, 70 cents, 75 cents. When I looked at them, they were like what, 30 cents. So that's what, a difference of 40 cents. That's 40 cents per contract. You feel me? You buy, that's really like $40. So, you know what I mean? You buy, what? 20 of them, 25 of them. And quick rack. Now they're 90 cents. So even more. So 10 of them, you feel me? Hey, $900. And this thing's just dumping. Look, now they're worth 120. Now they're worth 130. So they're worth an extra dollar now. Yep. All right, they were. All right, they were worth a dollar. They were just worth $1 and like 30 cents. But we came down here and bounced. They lost a decent amount of premium. And then you also like, so we're so close to the end of the trading period that like the there's basically no intrinsic value in them. It's all extrinsic. So like every freaking minute that goes by, they're just worth less and less. A good Apple trying to catch a bid down here at 158.50. See now these things are only worth 25 cents. For a second there, they're worth $1.25. Gotta be quick though, bro. Yeah, shit like that. You got, I mean, to scalp like that, you gotta have hotkeys and shit. But should remove all horizontal trend lines. Yeah, I've used hotkeys before, but the problem I had with hotkeys is I found myself over trading. Like, and then I was like, that's when I was it was like 3 years ago, and I was like fairly new to the markets. So, and I was you feel me? Like I wasn't on a zero commission platform either. So, bro, like doing all that scalping and over trading definitely freaking is detrimental, especially if you're new. So that's why I just stopped using hotkeys. So I mean, like if you're a scalper and like you know what I mean, a professional scalper, yeah, hotkeys are fine. But if you're fairly new, like I would not suggest using hotkeys, especially uh, if you're not on a zero commission platform. Because I remember looking like at my statements, freaking like for the month, or even sometimes like for the day, like my P&L, and there would be days where I made decent trades or like decent scalps, but over traded. And even though I was in the green on my trades because of the commissions, like it just basically like freaking negated any gains that I may have had. It was crazy, bro. That's how if you're not careful using those hotkeys, that'll happen. You'll overtrade, and market's just dumping. So last minute here, let's just look at some of these other charts. Uh, that's what Bitcoin looked like. Here's what the S&P 500 looked like. The SPX on the low, making new lows. All right, so there's like 5 seconds left, and we're just dumping even more. Let's go back over here. Look at this. Dumped. All right, and that's it. That's the end of the trading period right there. I mean, exciting. Success. Look at that thing. Straight up when we started dumping. I like success. Like my little, I like hedge with that thing. But yeah, man, that's it. You know what I mean, JP came on and shook things up a little bit. That's crazy because like earlier, like I was watching the market and stuff before I actually like started streaming, and bro, like my watch list and basically like my little heat map, especially like right before like he came on, like that live feed came on, or when they announced, uh, especially when they announced, um, the 25 basis points or whatever, bro. Like the whole freaking my heat map and everything was all green. Now look at this thing, dude. It's all red, bro. Look at this. All this shit was green before. I mean, AMD still finished the day green. GameStop, Nvidia, TSM. Look, the VIX. So basically, the semiconductors. You feel me? I guess you could say we're stronger today, and as a result, those are the main um tickers and or sector that even after this dump still ended the day green. Even after that dump. Look, check out Nvidia. Look at this dump right here, bro. Still ended the day green. Cause look, previous closes down here. Even after all that, still ended on the green tip, which is impressive, if you ask me. Bro, like after market close, like there's still a good amount of orders going through on the tape. I mean, not as much, but look, 400, like 460, 200, 100, 500, another 5. Still a good amount of orders going through. About the Qs. Looks like the Q, look, 1,000, 4,500. The Qs even more so. But yeah, man. Just you feel me? Wanted to kind of drop in and catch that press conference and basically the volatility and price action that comes along with that. And basically just test out the platform and see if it can handle all the data. You feel me? It seems like it did pretty good. I'm still not sold on it yet. I think I'm going to, bro, look at this thing. I think I am going to check out TradingView. The range on this, look, the high was 40.39.50s. The low was 39.36.17. So almost what, 100? Damn near close to it. Which is crazy. That's crazy. That's crazy. Yeah. Anyways, man. It's your boy E coming at you with some finance solutions. If you learned anything or found any value in the content, don't be afraid to let's get rid of all this. If you learned anything or found any value in the content, like I was saying, don't be afraid of the like button or even subscribe. Hit the bell and get the hell over to my Patreon and Discord to sign up for that daily morning watch list and market briefing, which, by the way, gives you that edge, brethren. Peace. Shit. Bro, like this thing's still making new lows, bro. FYI. So, on the low. Just saying, bro. That's crazy. But yeah, I'm gonna holler at y'all, man. I'm try to get on here and a little more often. I know it's been a while. My bad. Been having a lot going on. But yeah, holler at me.